Welcome, everyone. My name is Daniela Barbosa, and I'm the Executive Director of Linux Foundation Decentralized Trust. LF Decentralized Trust is a new umbrella that started in September of 2024. But the Linux Foundation, for the last 10 years, we're actually celebrating our 10th year anniversary this year, has been working in the blockchain and decentralized identity space. As these technologies continue to be adopted more through different use cases across all industries, decentralized technologies are becoming more and more important for a lot of the financial market infrastructure that you see and that we are building. And today we're going to have a fantastic conversation. When I talk about decentralized technologies, we're typically talking about blockchain, smart contracts, zero-knowledge proofs, cryptography, and other decentralized identity solutions as well. Many of you are here at FINOS, and where FINOS is a sister foundation to LF Decentralized Trust at the LF. So you know how open source works. And our projects, we have 17 different projects that are really addressing many market needs. And some of the premier ones that we have includes projects like Besu, which is the most used EVM, Ethereum Virtual Machine blockchain protocol. Besu runs about 16% of the Ethereum mainnet today, but also powers over 40% of blockchain EVM systems in banking and financial assets. We have other projects like Hyperledger Fabric, as well as some of our newest projects like Hyro, which is the code base that powers the Adhara ecosystem. Since the beginning, we've known it's going to be a need. Each enterprise and each use case is going to have different needs. But we're very excited. I was talking to the panelists before, and I'm going to let them introduce themselves. I've been coming to FINOS. I think this is my 4th FINOS event. The first time that we had a little booth to talk about blockchain, most people just walked away from us. I'm sure you've all heard it, right? People are like, we don't talk about blockchain around here. But just today and just this week alone here in London, we have so many events around digital assets and tokenization, and we certainly see these things being moved through into production and really bringing real value to the financial markets. So to get started, I'm going to let everybody introduce themselves. I also joked earlier that we're in like stablecoin, hot stablecoin summer. But the reality is we have 3 people here on stage who have been working in this industry for many, many years. And when we think about, you see these large press releases and these new announcements, these teams have been working with these technologies for a long time. And I think we have 3 of the best to talk to us about the importance of market infrastructure in this new format as well. So Will, maybe I'll start with Julio. We do only have 1 mic, so we'll have to pass it around. So Julio? I think I've known Julio the longest, actually.
Yeah, I started with this, I think, in 2014 or something, which makes me the grandpa of blockchain, probably. Anyway, so yeah, my name is Julio Faura. I'm the founder and CEO of a company called Adhara, where we essentially specialize on digital cash. So we provide digital cash solutions for banks under the form of deposit tokens, or some other people call it stable coins. But anyway, also central bank tokenized money. We are the company behind Finality, building the blockchain infrastructure for Finality. And before that, I spent good 11 years at Santander, building all the crypto and blockchain practice over there. That's how we met when we launched the Enterprise Ethereum Alliance. I was the founding chairman of that.
Thank you, Julio. My name is Prashant Malik, and I run digital assets technology team for markets and security services at HSBC. So we enable our business to provide technology capabilities for tokenization. So we have tokenization platforms for native assets such as bonds, and then also for physical assets such as gold. Both have been live for a very long time. And then we also are going to be working on digital assets custody. And in addition, we do a lot of innovation work and do proof of concepts and try technologies which is going to shape the digital assets in future.
Thanks. Hi, my name is Will Lovell. I'm a technology advisor at the Bank of England. I've been working on a bunch of things in the last few years. First of all, the replacement of real-time gross settlement, which is the system that sits under high-value payments in the UK. That's an entirely new platform that went live 6 weeks ago. Got to remember, it replaced something that was over 25 years old. So took us a while to get there. But what it's given us is a platform that enables us to interface much more readily with modern technology and modern settlement platforms. That's the first thing. I also work on retail digital currency, so the digital pound, which will be a digital equivalent to a UK banknote. We've got a lab for that has just launched. It's going into its second phase of applications in July for people to test wallets and things like that. We've also got a DLT challenge, which was launched yesterday, in fact, talking to fintechs, particularly in the distributed ledger space, about how you bring central bank money onto that. And last of all, working on Project Adhara with the Bank of International Settlements, which is 7 currencies, 44 commercial banks, working out how we can use this kind of technology to improve cross-border payments and correspondent banking. So lots going on. Do I pass back now?
Pass the baton. And the Bank of England has been a member of LF Decentralized Trust and the Linux Foundation since 2017, I think it is. So one of the first central banks, today we have quite a handful, but one of the first central banks and really a great partner in what we've been talking to the marketplace about. So we have a central bank, so we have a regulator on the panel, we have a private bank with HSBC on the panel, and a builder with Adhara as well. So I think it's a really great view into the market. So as we think about decentralized technologies, Prashant, I'm going to throw this one over to you. What are the things that you are leveraging from a technology perspective that you are now able to build and deliver to your customers that perhaps you weren't in the past? And perhaps also add some of the challenges that you have as well.
So we see that decentralized technologies are enabling not only new products, but also new versions of the products that have been existing in the conventional markets. And to me, I think broadly we are solving a few challenges, and I'll name 2 of them. First is efficiency. Are we able to build products or offer products which are performing better than their conventional avatars? And an example here I would give is a digital bond. So normally a bond settles in T+5, and we have been doing a series of digital bond issuances. Our HSBC Orion bond platform has been live in Luxembourg and Hong Kong. And as an example, the first issuance we did was a first sterling issuance that European Investment Bank did on our platform. And I think the key thing there is that the bond was issued on the platform, so the token itself, the bond token itself represented the bond. And when you exchange the bond token with the settlement token, which is essentially a tokenized form of commercial bank money, that exchange was recognized as a title transfer. So you do that exchange, and that allows you to sort of settle, do the DVP instantaneously. So just by doing that and other optimization in the processes using smart contracts, we have been able to settle digital bonds on a T+2 basis, which is clearly an improvement over the existing norm. Another example I would give is touching the other aspect of the benefits which our investors are seeing, clients are demanding, and that is accessibility. Example here would be tokenized gold. So we offer tokenized gold in Hong Kong to our retail customers. And the real benefit here is that you got LBMA gold, which is highest standards of gold in the world, one of the highest standards. And you're able to offer that gold to a retail investor in Hong Kong, so you're able to fractionalize it. Normally, a bar sitting in our vault would be about 400 troy ounces, so about 11 to 12 kilos. And you can actually fractionalize it so much that a user in Hong Kong can buy 1,000 part of a troy ounce. So normally, if you're going to be buying that big gold bar, rather brick, it would be over $1 million. But through tokenization and through fractionalization, you're getting the same standard, high-quality gold, and you can buy with a ticket size of as small as one token, which is hardly less than 100 Hong Kong dollars, or maybe less than 50 Hong Kong dollars. So that is a real benefit where you are now able to make a product much more liquid and able to access a market which previously was not accessible to that particular product. So in a way, you have a product version which is more efficient, to summarize my my view on this. And then on the other hand, you have a product which is previously was not even available because, obviously gold is high quality but not very liquid, and you're now injecting liquidity through the benefits you are realizing using decentralized technologies. So some of those challenges we are solving using those technologies, which are now enabling us to build these new products, new version of products, and that's basically we are approaching the market in a different way now.
So efficiencies, we're catching efficiencies and accessibility, right? Two really important pieces of why many of us in the blockchain space actually came into the blockchain space as well. Now, Julio, you work with a lot of banks and and other asset managers. What about you? Like, what are the things that you are seeing your customers and your partners benefit from with decentralized technologies?
Yeah. So yeah, we know other banks doing similar or related, let's say, experiments. Sometimes it's about providing more liquidity to assets that are not that liquid. So, and it can be applied to many more things, like for example loans, right? So you can do more active credit portfolio management, which is something that active banks like to do, right? To optimize their balance sheet. And there are others in the making, like private equity funds, or things that by design kind of are not that liquid. So that's one of the possibilities. Other banks are using this more on the cash side, on the tokenized cash side. Tokenizing gold or tokenizing these things, has its challenges, but tokenizing money is a lot more complex because it's got a lot of regulatory constraints and actually producing cash that is legally binding and to be able to be used in transactional environments is more difficult. It's kind of the bread and butter, right? So if you get this right, then there are a lot more things that you can do. So some banks have started by the hard part, but in most cases I think it is more sensible probably to try to find these quick wins, right? That can be done with probably less regulatory effort, right, and less integration with their existing systems, particularly the cash systems, which are always more difficult to integrate, right? This is essentially an extension of their core banking systems and their payment systems, and it's always quite critical, right? It's quite ingrained with the very heart of the the technology engine of the bank. But that's a quite popular one. So the idea of creating tokenized cash first for the use within the bank. So imagine a bank that has multiple subsidiaries or branches. And many times we find cases where these branches are using their own correspondent banks. So all the payments that go on us, right, within the bank are reasonably inefficient, and they have to fund the liquidity exposures they need in order to process payments, and that's very expensive. They have to borrow a lot of money from all the different subsidiaries, and that's expensive. So a popular use case is precisely using tokenized cash for the benefit of the banking group and being able able to use that as a liquidity hub within the group. So you can internalize liquidity flows, you can reduce funding costs, and you can produce much better payments as well. The more advanced banks are starting to use it to provide tokenized cash or deposit tokens services to clients, as in offering digital payments and digital money that it can be used 24/7 and even can be used in programmable fashion, right, in programmable manner. So it's so people in time, I mean, we're able to actually interact with the money programmatically and couple that with their other digital systems like inventory management systems or trade finance or procurement systems that can also be based on blockchain, right? That's kind of the holy grail. That's where we want to go. Probably is the fewest of the clients that are advanced enough, right? But we're starting to see it, right? We're starting to see it, and it's obviously super exciting. So we're seeing a lot of movement there, right? This idea of creating tokenized cash, both for internal use, for settlement, and also for clients, and it's a way to make cash payments. I mean, payment services that. In a much more agile and open and transparent way. Also, one of the drivers is the transparency that this gives, right? Because particularly cross-border payments often need the participation of many parties, like my bank, your correspondent, their correspondent, the RTGS system in the middle sometime. So actually bringing together all of them around a single version of truth is a very interesting concept, right? Because otherwise you have to do lots of reconciliations. It's very simple to have errors. Banks, even in Western economies, they still have tens of thousands of failed payments every year. And it's a small fraction, obviously, of the payments, but it's severe, right? Because it takes time. It's a VAT service. It's operational risk. So this is a way to actually reduce those problems and also provide transparency to the client, as knowing exactly where the payment is and having certainty that the payment is going to be finalized. So those are benefits that most of the clients we're serving are seeing.
So trust and transparency obviously is core to the digital decentralized technologies as well. So, one of the things, and I've heard it actually quite a few times actually today, is like, hey, Daniela, why is this taking so long? You guys have been at it for a while. And if you asked me the question in 2017, when I first joined the Linux Foundation to work on blockchain, I said it's going to take 10, 20 years. And I used to always joke about, I'm always joking, and I would say, and I want it to go that slow, right? I want actually financial services, the financial industry to do things in a pace that is safe for consumers and for the industry as a whole. But there are natural speed bumps and issues that the industry has over the last few years met. So maybe I'm going to throw this over to you, Will, to talk a bit about some of those speed bumps and kind of what you see, central banks also how to try to resolve those speed bumps.
Yeah, thank you. Yeah, and I absolutely agree. I remember being at an event, something like this I think it was about 2015, where there were confident predictions that all settlement would have moved onto a blockchain by about 2021. So clearly that hasn't happened, and there's a bunch of reasons for it. And one way to sum it up is to say, we've discovered how big the too difficult pile is. So I'll give you a simple example of that. 24/7 settlement sounds fantastic. But in reality, most financial firms and businesses have built their processes around a start of day, an execution day and an end of day, and a reconciliation. And for sure, you can engineer all those things out. But that often proves to be more challenging than you thought it was. And it often it proves to be that you find other blockages and other changes, or that there's a network effect that enough people have to move at the same time to actually realise the benefits. You've then got to persuade the early movers that it is going to happen and that it is worth the investment. I mentioned earlier on about replacing the UK RTGS, the high value payment system, we now have an architecture that will run 24/7. So we've taken the Bank of England can't do it constraint that everyone would have told you about 10 years ago. That's off the table. And now we're finding where all the other constraints are. And that process will take time. I think you also come across, I work in the operational rather than regulatory part of the organisation, but still, it's very easy to say around regulation, well, if it's the same risk, we'll regulate it in the same way. But when you start to look at things like stable coins, I think there are legitimate questions about saying, is it the same risk or is it a different risk? Is this actually a set of assets in a custody account somewhere in a token that lets you access that? Well, is that a payment system or is that an investment fund? And how should we think about it? So the answers to those questions will always be, it depends. So as we learn more about the use cases and the real problems we're trying to solve, we'll be able to work our way through it, but it's going to take time. Did you want to come in?
So I completely agree with what Will said, and because the existing infrastructure has been built over many decades, and not only the infrastructure or the market size is huge, but it's very, very complex. So in my opinion, in last 5, 6, 7 years, market participants have taken a more targeted approach as opposed to trying to sort of bring wholesale disruption, at least on the asset side. Payments probably has been a little bit more bigger scale, I would say, especially with the stable coin, all the news coming in, especially in this year. So the challenge itself is massive. And by solving some of the targeted use cases, we have learned a lot. So as an example, you mentioned RTGS becoming 24/7 now. That will enable you to do the exactly same thing you were able to do on conventional instruments, paying through central bank money. And central bank money is important. It's the safest and secure form of payment. So if you do not have something 24/7, which is needed on the digital side, then you cannot build use cases around that. So all those things, there are many, many moving parts. But I think the key thing for me is that the trajectory is quite positive. Increasingly, investors are also demanding for these solutions to realize the benefit of various innovations in payments and also for tokenization. I think one thing, because our journey so far has been, because we have been working on targeted use cases, as a result, we have kind of built little private islands where the liquidity is sitting, and that's not interconnected. But then equally, there are good initiatives happening on the interoperability side. And interoperability for me is not just technical, it's much beyond that, operational, regulatory, legal, and touches compliance, especially when it goes cross-border. So it's a big topic in itself, and we are seeing more and more initiatives are coming along. Open governance frameworks are being put together, so that's encouraging. And I see that those challenges are being dealt as we speak. Some people may say not at the pace as we like, or not at the pace where the crypto industry moves, but they are happening at a pace which is probably good for regulated markets.
Well, you want to add to that?
No, just to agree. I think to a large extent, there's a topic around banks being prepared to use things that are a lot faster versus what they're used to do. I mean, we've been talking about intraday liquidity management for decades, right? And the reality is that if your systems don't support that and you cannot automate decisions, it's just, it's like, having a Ferrari and you are in the middle of the woods. I mean, you need the road, right, in order to drive it, right? What we are seeing, but we're seeing a lot of evolution in the past years. I mean, I think a few years ago, it was about maturity of the technology and actually even viability of the technology. Then people, I think, got convinced that was the case, and people understood that if everything were like this, then it would be great, right? But it was difficult to kind of find a small thing to start with, right? Because you cannot do a big bang and change everything, right? So we've seen in the past maybe couple of years a lot of these initial steps going forward that are having beneficial, like digital gold, digital assets, also on the cash side as well, which is more difficult. But we've seen some of those things. Most of the focus that at least we as a technology vendor are insisting on right now is more connectivity. Functionality, making the tools. What we do really as a core business is the tools that the banks need to connect to these new digital venues, right? So they can seamlessly integrate and use, and you have to do it in a way that they can integrate easily. For example, using Swift message formats instead of cool APIs, because that's what their systems do today, right? So a lot of that we have been working on, and then finding the initial things that you can do to for example automate these systems. For example, we have technology that detects incoming obligations from post-trade settlement process orchestration layers or from payments, etc., right? And allows to or helps bank automate the funding decisions and the fulfillment decisions they have to do in order to settle, for example. Right? Yes, you can settle with digital assets or digital cash that works, real time and with zero latency, whatever. But if you don't have the tool that actually can automate those decisions for you, you're not going to have someone in a back office just doing 10,000 settlements a day. I mean, that's just impossible. So I think that the focus is shifting towards that. It's actually operationalizing this, automating this to be able to start getting the benefits that everybody, I think, agree are going to be, but in a really feasible way.
Yeah, and this is like one of the reasons that we LF Decentralized Trust and our team comes to FINOS every year, and the rooms are starting to get a little bit fuller, is because I think the interaction between the work that's happening at projects like FINOS are becoming more and more critical to the intersection of what's happening in the digital assets space. And so I think, continuing making sure that we educate, because ultimately what you need, right, everyone is aware that the technology scales. It works in production. We need more engineers in the industry to understand decentralized tech and to upskill themselves from Web 2 engineers to the Web 3 engineers ecosystem. But I'll ask this, the question of the panel is, I truly believe that as we build market infrastructure that is going to be around for our children and our grandchildren, that it's really critical that open source and open governance of the code and the networks as well is critical in how these platforms are being built. So to wrap up the panel, and then we'll open up for a question or two, can you talk a little bit about when you make decision choices, why projects that are at the Linux Foundation, like Linux Foundation Decentralized Trust projects, you select them and you think they're critical for implementation? And I'll start with Will and then come around this way.
Sure, thanks. So I think we have two headline principles about selecting technology, and they are security and supportability. So it's got to be something that we can secure, because we are a target for every different type of cyber attack. Let's just say that, and we need to be able to support things. As I mentioned earlier, the infrastructure we've just put in replaced something that was 25 years old. Now, fortunately, it was something we managed to keep in support for 25 years, but that had been quite a lot of effort. So selecting things that are technologies that people know and can learn is really, really important. And I think open source lends itself in particular to problem spaces where you have a lot of different sorts of businesses and actors, Linux being the obvious example of that. Eventually, there used to be all sorts of different ports of Linux. Of Unix. There's now just Linux, and that's for the obvious reasons. And I think as other types of technology emerge, that kind of standardization becomes something that is easy to support and easy to secure as well, insofar as anything is.
Yeah, I agree with Will, and that's definitely a consideration for almost all of the organizations. And maybe to add to that, I would say 2 more points. One is that open source actually helps accelerate innovation. So a good example I would give is we did a proof of concept last year where we secured our gold tokenization using post-quantum cryptography. And in that, we were not only able to demonstrate that you can actually run your DLT in a more secure manner, so you prevent it from cyber attacks, store now, decrypt later kind of attacks. But also we demonstrated that our gold token is interoperable to EVM chains. Currently, it's built on a private DLT. And we actually did a white paper, very successful on our website. But the key thing there is that to make it that viewpoint more credible, we wanted to actually do it on our own, road test it. And we were able to do it actually quite rapidly using some of the open source technologies. So, and that actually gives a lot of credibility to the viewpoint you are providing. And essentially, I would think in this instance, it's a kind of a framework which will benefit, hopefully, innovation in this area. And then the second aspect, I think, is that it also catalyzes in bringing people together. So when we talk about open standards, open governance frameworks, essentially you are actually, creating not only artifacts but also forums and helping in building that collaborating environment by setting standards, helping create consortiums, which is absolutely very important for use of decentralized technologies, because remember, decentralized is decentralized. So yeah, that's again I would think is a great benefit that we can derive from open source.
Yeah, well, as a vendor, we have to use what is acceptable to our clients, and I think open source is consubstantial, really, to decentralized technology. You cannot say that you're going to produce something that is trustless when you have to trust me as the maker of something that I'm not going to show you, right? It's like asking you to sign a contract without reading the contract first and just trust me because it's okay. So that's not probably something very, very sensible. So yeah, we do leverage open source blockchain technology. We don't use any proprietary solutions, or not attempt to build proprietary solutions for our clients. I don't think it's right that they should create any lock-in for our clients. It has to be like that. We do have proprietary pieces, but are really convenience pieces, right? That you can use to connect to these things. So if we disappear, they always have the strategic possibility of building it by themselves or getting someone else to build it, right? But the core of it has to be open source. That's what our clients need, and I think it strategically makes all the sense.
Open source as one in a decentralized world as well. I think we have time for one question if there's any question.
Firstly, thanks for basic, everybody paying for things with stablecoins. So that's part one. And then part two is kind of, so one of the main value propositions of stablecoins is what that people talk about is lower fees, fees lower than traditionally Visa or MasterCard would pay. Do you think that's actually a realistic statement? And do you think fees can get much lower, and perhaps how low do you think they can get? Can they get like below 1%?
I'll have a go. A great question, and I think in some ways the second part of your question addresses some of the first. I think that there needs to be a bit of there will be a bit of a sort out of stablecoins. There's lots and lots of noise and there's lots and lots of offerings. I think where the places where they will offer lower fees are in the places that are the most expensive. So, cross-border in corridors where it is particularly expensive. So I was somewhere a couple of weeks ago where someone was saying to send money from Nigeria to the Ivory Coast, you have to go through the euro. You can get a taxi from Nigeria to the Ivory Coast. So why does the money have to come through Europe? So those kinds of corridors, and it's a great example and it's an interesting example, are where the fees are high and they can come down. I think broad adoption for retail purchases, particularly in economies where there is, a reasonably well-functioning payment system, that's a very, very different proposition and very, very different use case. So I think the sorting out will come as different coins and different levels of programmability address themselves to those use cases. We'll see them sort out. And we can come back next year and see if I got it right. That's my prediction.
Any comments
No.
Well, I think it would be worth understanding what is really the expectation from a stablecoin, right? Because if the cost of today's payments come from the friction in the kind of the ability to move money quickly or provide better access to the money, then I don't know what is it that you can do with a stablecoin that you cannot do with a tokenized deposit. Tokenized deposit is just your bank account, but put on blockchain, right? So why is that not good enough or as good as a stablecoin? If what we are looking for is speed and access and the ability to move this quickly and 24/7, etc., then this should be good, right? If the reason why the payments are expensive is because you have to do anti-money laundering and counter-terrorism measures and all these things. And the reason why stablecoins is cheaper is because they don't do all of that. Then this will grow until it becomes a problem, and then someone will shut it down. So I don't know. I mean, we can do everything, right? And we can help people because it's just technology that can just be applied in different regulatory figures, etc., right? But if the banks are able to, get their tokenized, their bank accounts to be as performant from a accessibility and speed point of view as a stable coins, then I think the money will continue to be money as it is today. And if not, then is when I think there will be opportunities, right, for new forms of cash. I mean, the stablecoin is not really money, or it's kind of electronic money. So it's, but then there will still be a need for that, and we will see more growth. It's really difficult to make a prediction at this point. But anyway, just my 2 cents.
Will it last through stablecoin winter is the question. All right, well, I want to thank the panelists. Thank you so much. I know we are out of time and the other sessions are starting, so I want to be respectful. I don't know if you're going to be around. If you have any questions for the panelists, please do grab them after the talk. We do have a booth. Do come down to the booth. We have Applied Blockchain, Launch Nodes, and Pearpoint, who are members supporting us as well. And Adhara and Bank of America are members as well. And then if you want some more stable coins, since we're in stablecoin summer, tomorrow evening at 5 p.m., Vodafone Pearpoint will be hosting tokenization and stablecoins meetup for our LF Decentralized Trust meetup. There we'll have 3 speakers. David Palmer from Vodafone. We'll also have somebody from the GMSA, which is the Telecom Standards Organization, and they'll be talking about telco stablecoins. It's going to be a very interesting talk. And then last but not least, Tony McLaughlin will be speaking about stablecoin market infrastructure. So take a scan there. If you want to join us, we will talk stablecoins all day long tomorrow as well. Thank you, everybody. Thank you for joining us, and I hope you have a great rest of your evening.